Hello, this is Anna from annacooling.com and welcome to this roundup of last Friday's Forex webinars, which not only delivered some great trades, but also some excellent trading lessons, which reinforced not only our volume price analysis methodology, but also our unique approach to the Forex market. It was also great to welcome so many quantum trading customers, and even more importantly, to learn about their trading successes. As usual, our own trading day started during the tail end of the Asia session, and what caught our eye immediately was the weakness in the euro and the euro complex in general, coupled with strength in the Aussie dollar and the British pound. In addition, from a fundamental perspective, on the horizon at 8 a.m. London time was a speech due from ECB President Draghi, thereby putting all euro traders on alert. Of the euro pairs we monitor, it was the euro pound which looked the most promising on the 5-minute chart, where a failure to move through the resistance in the spot 70-20 region resulted in a 2-bar reversal candle pattern, which was the trigger for a dramatic move lower during the webinar. The most striking feature for the euro during Friday morning's trading session was the fact the single currency was heavily oversold across all the time frames, from the 1-minute chart upwards. With so much negativity towards the euro, this sentiment was consistent, universal, and helped further by Draghi's comments. The only question throughout the early phase of price action for the euro complex was whether this bearish sentiment would continue, and which is always reflected in the volume-price relationship. Indeed, midway through the move lower on the euro pound, the market delivered a trap move around the time Draghi was speaking, with the trigger of the volatility indicator, the purple arrows, on an up candle. This is a classic trick played by the insiders whose motivation is to suck traders into weak positions. On this occasion, it was to trap traders into thinking that bearish sentiment towards the euro was reversing. And once the trap had been sprung, the market then continued lower in dramatic fashion on rising and well above average volumes, with consequent stopping volume only coming into the market on the price waterfall as the euro pound approached the cluster of support in the spot 69.84 region. This was the point we ended the first of our Forex webinars, explaining that our expectation for the euro pound was that the pair would first move into a congestion phase with accumulation and testing before any reversal was likely. The pattern of price action for the euro pound was also repeated on the euro Aussie, which delivered a far more smoother downwards trend, but with no associated trap move. Whilst we were considering the euro complex, the Aussie was also producing some great moves to the upside. Aside from the volume price analysis and volatility lessons, the overriding take from this session is the extent to which a currency, market or instrument can stay overbought or oversold, and the importance of including patience as part of your trading tactics, particularly if you like to enter positions on pullbacks or potential reversals. Accumulation and distribution takes time, even on the faster charts, and is one of the reasons so many traders get stopped out of trades, as they do not give the price action time to settle and reveal its future direction. Finally, what was interesting in this London session was the relatively muted participation from the US dollar. It was all about the cross pairs and the commodity dollars. Look forward to you joining us next week on Forex Friday with David and myself, and if you haven't signed up already, you can do so at www.annacooling.com. Hope to see you again next week.